Hello everyone, I'm Sebastian. Today I will be talking about taxation between the US and Spain. This will be basically a practical guide to properly report your income and avoid double taxation. Therefore, we will cover the following important points: the tax calendar, the US tax exempt income taxable in Spain, exempt income in both countries, tax exclusions for U.S. citizens and residents abroad, and the U.S. Spain double taxation agreement. Being that said, we will start with the tax calendar. For most Americans, the 2025 tax season ends on April 15, 2025. If you can file your return before that date, you can request a 6-month extension until October 15, 2025. On the other hand, in Spain, the fiscal year runs from January to December. The 2024 income tax return campaigns begins on April 2nd, 2025 and ends on June 30, 2025. Now we move on to the U.S. tax exempt income taxable in Spain. First, the U.S. Social Security. Although it is partially exempt in the U.S., it may be taxed in Spain if the beneficiary is a resident. Then we have private pensions, 401k IRA. These are tax deferred in the US until retirement, but are taxed in Spain as earned income. Municipal bonds, these are exempt from US federal tax but are taxed in Spain as investment income. Educational savings accounts. These are tax exempt in the US if used for education, but may be taxed in Spain. Finally, life insurance benefits. These are exempt in the US but may be taxed in Spain under inheritance tax laws. Now we will talk about the exempt income in both countries. First, we have inheritance and gifts. These are taxed under inheritance tax in Spain, not under personal income tax. Then we have personal injury compensation, generally exempt unless paid as regular income. And finally, social assistance and welfare benefits. These are not considered income and are not taxed in Spain. Now, for the point number 4, the tax exclusion for the U.S. citizens and residents abroad. To claim foreign income exclusions, income or housing, 5 conditions must be met. First, foreign tax domicile, residence or physical presence in a foreign country, excluding Puerto Rico and Guam. Second, foreign income earned through personal services. Meet either the bona fide residency requirement, full fiscal year, or the physical presence requirement, 330 days in 12 months. Make a valid election by filing Form 2555. Now we move with the foreign earned income exclusions. You can exclude up to $126,500 per person in 2024. If your spouse also qualifies, together you can exclude up to $253,000. This limit can be reduced if you also claim a housing exclusion. Finally, for this point, we have the foreign housing exclusion and deductions. The exclusion applies if the housing expenses were paid by the employer, and the deduction applies if the expenses were paid with self-employment income. Now we move on to the last point of this video. There is currently a double taxation agreement which tells us the following. First is that the public pensions, and these are basically taxed only in the US, and the private pensions that are taxed only in Spain. Regarding IRAs, withdrawals are considered earned income in Spain. If you would like more information about taxation in Spain in relation to your country, please don't hesitate to contact us.
For more information, remember to check our website and follow us on our social media platforms. You'll find the link in the description box below. And if you want to stay ahead of the curve with expert guidance on streamlining your paperwork, be sure to hit that subscribe button and stay tuned to our channel.